All right, good morning, everyone. Okay, going here. All right. S&P last night, bit of a dramatic session to an extent. Basically plunged into the first half of the day. Traded down about a little over 1% on the S&P, even more than that on some of the other indexes. I think the Nasdaq was down almost 2% at that point, and then we had very sharp rally just straight back to more or less the highs of the day. And then the last hour, we really just faded again into the close to close down about 0.5%. So a bit of a back and forth session, but I think somewhere in there the market kind of felt like it found some sort of support when it was really looking like the bottom was going to fall out. So I think that was important. You can see there sector view a little bit mixed, but for the most part down on the day. We do have the Fed that's meeting today. So a little speculation on what's going on there. The data in the States continues to really come out good, and I think that's starting to put a little bit more pressure on a potential change in monetary policy, even though you're not really seeing it in the 10-year. And then we also had we continue to see what's going on with the emerging market space, which kind of felt like it started to come to an end yesterday with the Turkish lira finally making a bounce. The rand finally made a bounce off the lows on the back of the Turkish central bank having that emergency meeting, and just kind of showing that this is getting to a breaking point for the economies of these emerging markets, and that they're going to need to do something about it rather soon. So all right, let's have a look at Asia. Asian markets a bit mixed. Remember, Australia wasn't open yesterday, so we really saw the follow-through from the Friday's beating that the S&P, that the U.S. markets took. So we saw the follow-through, and we saw the Aussie market down over 1%, but the rest of the markets are mixed. We had the Nikkei up a bit, the Kospi up a touch. Shanghai down a scrap, and the Hang Seng actually has managed to sneak its way into positive territory to finish the day here. So I think one of the big things, and we've talked about this over and over, continues to be a story. Everyone continues to talk about the Chinese markets, but the potential slowdown there. That chatter is really building, and I think the worry about China is continuing to grow, and I think that's been part of the reason of what we're starting to see, because the emerging markets are the ones that are really, I think, affected most by this. We also saw the Japanese yen that's kind of put in a bit of a ceiling, I think, against the dollar over the last couple sessions, where you really saw a total bail on risk assets, and we saw about 300 basis points out the dollar yen, and a correction down to around 102, but we seem to have found some sort of floor there. That's the level I think we're gonna need to continue to watch going forward to see if things really start to get ugly and people are looking to bail on risk again. That's where we're going to watch it most closely. I think a lot of people are short yen still. A lot of people will have that trade on, and that's going to be a good indicator for us. All right. Moving on into to corporate action, we had Apple yesterday. Just a quick review in the States yesterday. That was down big after hours. You can see it in the in the Nasdaq futures at the moment, which are down about 0.75%. The basic story there is that there's just a pretty significant miss of about 4 million units on the iPhone sales. All their other numbers were better, the PC numbers, the iPad numbers, and all the other stuff. But the iPhone numbers is what really counts, and they missed quite reasonably there, and also guided a little bit lower than expectations. So we saw Apple down about 6% after hours. So just keep that in mind. The tech space could be a little bit heavy because of that, or certain obviously could be looked at positively that maybe some of the other guys are taking market share. All right, Pfizer out before the bell today. Comcast out before the bell. We got Danaher, Ford, AT&T, Amgen, and Yahoo, the last three all coming after the bell. So continuing to go into the meet the earnings season. It's been somewhat less than impressive, so up to date. All right, we had industrial profits year to date out of China. slightly lower than the prior numbers. We have French consumer confidence as well as Italian consumer confidence. We've got UK GDP quarter on quarter at 11:30, as well as the index of services numbers. We've got durable goods out in the States at 3:30, and then at our closing bell, we've got consumer confidence, Richmond Fed manufacturing index, and the Fed meeting all there in the States at the close for us today. All right, let's jump into the maps. Okay, not going to go too crazy today. We're going to be looking at several of the charts that we've looked at before, but certain of these stocks just starting to retest levels. Just to reiterate it in your mind, we know that we're going to go all the way back to a 5-year here, and let's go all the way back to the 10-year in Standard Bank, so you really get the full brunt of the picture here. Standard Bank coming back down to test 120. That's our major level. We know all about it. I just, to an extent, I feel like it's the biggest gift ever that's gotten back down here to 120. I think it's a great opportunity, risk reward, and when you can see how big this breakout's been. So we've talked about it before. I'm not going to go over it all day, but 120 is definitely the support. In looking at potentially if putting this trade on and where you would maybe set a stop loss in case it does manage to break below this level, I'll be looking below 119, which you can see there. We bottomed at 119 4 times on that after we broke out from 120 quite nicely. We came down, we tested 119 four times. We touched that number before we finally pushed up to 130. All right, we'll look at Nedbank. Nedbank also managed to hold yesterday, incredible hold out of Nedbank, and really still managing to kind of hang on to the same sort of thing. If you look across the pattern, looks very similar to Standard Bank as well. Standard Bank on this breakout and then the retest of support, it looks very, very similar, kind of flagging down into this level in Nedbank. And yesterday was a big deal, I think, for it to hold up above or hold up at the 200 support level. All right, MTN, we'll have a look at MTN here. MTN will shorten this one up. MTN finally we got a correction all the way down to 205, or at least within 25-30 cents. You can see there intraday we did come down into the low 205s to sort of fill the gap on this breakout. We've really been just feeling like we were flagging out for a while, so that pattern is still looking pretty bullish at that point, and it's a difficult play to short out of once we start to move out to the right quite a bit here. But now that we've kind of filled the gap here closer to 205, it's maybe not a bad nibble, especially if we get another test or another opportunity at 205, and that level that we're going to look at, it's going to be somewhere between, call it 205 and 202, I would say, is definitely the risk range where you'd be looking to maybe nibble on MTN if you're looking for some long exposure. All right, Naspers, if I'm not mistaken, called an upgrade this morning, also up 10 cent, was up significantly in Hong Kong. And looking at Naspers, let's just have a look at this again, because a lot of people I know were really wanting to buy this thing on pullback, and then the pullback's been so vicious over a couple of days that it's been hard to really stick with, obviously, or not get stopped out quite quickly. I think 980 is definitely a major breakout level where we'd all love to be able to buy. But yesterday we really did come down and test our the next level that we broke out from, and that's really where we closed. You can see there, call it 1035. We broke out from back in December and never looked back. Obviously, we traded all the way up right next to $1,200. We've pulled back almost 15% from the highs. So we have pulled back 15% from the highs, and so it's a significant move that we've seen to the downside in Naspers. The one thing is you can't say that 15% is too much because of how hard this thing's run. So just be careful. Obviously, it's going to trade really well this morning, and there should be support for it at least out the gates. But just be careful out there. This thing has shown how volatile it can be over the last couple of days. All right, the last one I'm going to show is breweries over the water. I'm going to show it over the water simply because the pattern is much better. And you can see how clearly defined this is. Right here, the top end of the range, up around 33 pounds. And then the bottom end of the range really somewhere maybe a touch below 30 pounds, and we dropped out of that quite hard in the last couple sessions. So you can see from that chart there, we're really looking for about 3 pounds to the downside below 30. So we'll be looking for maybe a move down to around 27 in breweries, over the near term on the chart. So I think just carry that over. Maybe have a look at that in your SA trading if you're not looking at anything, if you're not looking at the international stuff, and just keep it in mind over the next few sessions. That's it for today, guys. Thanks a lot.